From BlackBull Markets. Behind me, the chart of gold. A lot of price action across the last 24 hours as we saw the dollar sell off and then rally as in tandem with news events and across the entire FX grid. Commodities followed a similar pattern. Oil went up to those $74 highs, fell off of those, and same with gold as we saw positions unwind on assets against the dollar. Gold currently trades around 1796. It battled past after the slow holiday trading period up to the 1816 level, which was the top end of that channel, which we've drawn out on this 30-minute time frame, which has played out ever since July trading has begun, where price is now trying to find an angle back above 1800, close above 1800, mark steps to start to wipe off some of those losses that we saw back at the tail end of June, of course. Now, the real question is, with central banks now starting to taper back QE, can we see a resurgent demand for the US dollar? Now, with what we've seen yesterday's announcement on the RBA, the answer is possibly yes. Breaking through that channel on the 30-minute chart, we could potentially see more downside in gold as the dollar continues to rally. If we switch to a daily time frame, we've got a fib drawn here, and we can see, as you know, gold likes to play out in these support and resistance zones. We did get a big wick across the market yesterday, long wick candles, very small bodies, which could mark some reversals heading into July. Now, to the downside, what are we looking at? Well, we're looking at 1769 as a key support area, which has played out back in April and also going back into January and November of last year. Two bottoms around 1769. A movement back from 1796 using 1800 now as a resistance level. Fundamentals on their side, aiming at 1769. To clear that, you're looking at sub 1769 heading down to 1676 to the downside, and that's a dollar long play heading into next year as interest rates rise from the Fed and other central banks begin to taper. Could see the dollar back into resurgent demand. Inflation trade possibly already priced into a somewhat still commodity heavy gold linked trade, but let's see how this does play out. For now, we're currently toying with that 1800 level. Moving below 1800 does put back into play 1769. So keep your eyes on this trade. Gold continues to be a volatile one, and trade safe.